Hello everyone, it's Thursday and that means it is time for us to talk about robots and trading and well, sometimes we talk about tennis and sometimes we just sit and talk about our personal lives. No, we don't usually do that. Today I want to talk about a drawdown, a topic that is very, very prominent in everyone's mind, or at least it should be. And if it's not, I hate to be negative, but we need to talk about drawdown, especially if you haven't thought about it. But we're going to talk about specific drawdown today. Drawdown on a system that does not use stop losses. Because that is a very unique form of drawdown. So that is the topic for today. But before we get into that, I wanted to let you know, maybe you don't care, but that doesn't mean I'm not going to tell you. I'm still going to tell you. There's a couple more interviews on my interview screen on my website. And there's my login screen, and there's my website, and here they are. There's one I did with Rob Booker on June 2017. If you haven't, that's the most recent. That was just a month ago, less than. If you want to check that out, all you do is click on the link, and it goes right to the interview. But there's some old ones, too. People keep sending these to me. They say, oh, I found an old interview from you. This one way down at the bottom is the oldest, and they're chronological. You can see it goes from 2012 all the way to now. So many years of talking. But that was on Rob's old Traders podcast, and we talked about peak performance athletics. Isn't that interesting? And then there's another one up here, being mentally strong and the benefits of private coaching. That's another one that was not previously. So I think I've gotten everything I've said online. There's a whole bunch of them. Plus, there's 150 episodes of the Rise and Shine podcast, which I did with Rob and Jason. So if you're interested in stuff like that, I've got all sorts of interviews there. And if you have nothing to do, go ahead and check those out. All right. Let's talk about getting out of trouble. Now, nobody likes to be in trouble. I think that goes without saying, right? That's the really, really not fun part of trading, is the trouble part. Unfortunately, though, we can't have trading without trouble. We can't have the happy without the sad. And it is inevitable. Now in tennis, we're talking about tennis. In tennis tournaments, specifically Grand Slams, you have to win 7 matches to win a major. Everybody aware of that? Can we just agree on that? Because it's true. 128-person draw, you got to win 7 matches. If you're going to win a major, sometime in those 7 matches, you're going to have something that's super scary. There are very, very few majors ever where the champion rolls right through and never faces really any adversity at all. They just win, win, win straight sets. Now, Roger Federer hasn't lost a set yet this year. That's glorious. But that is very rare, and he has 2 more matches, and he could very easily get into trouble. Getting into trouble is part of it. It's part of sports. It's part of your relationships. It's part of life. There's going to be one tough moment in almost every situation, right? In your relationships, it's going to be one big fight where it could go either way, and I don't want this relationship, or I'm going to stick it through. Everything, every match, you're going to lose this match, you're going to stick it through. And are you going to get rid of this trading system, or are you going to see it through? So everything is going to bring us trouble. The question is, what are we going to do about it? Well, that's what today is about. But there are 2 specific types of trouble if you're a trader, specifically if you're a day trader, but really if you're a trader in general. If you're trading a system that has stop losses, meaning there's a hard stop, it's in the market, it's not, well, I kind of think I'm going to exit here. No, it's not what we're talking about. The stop loss is in, your hands are off, there is no decision making, you're going to stop out if it goes the wrong way. Got it? If you're trading a system with stop losses, then you don't really get into trouble. I just got an email today from someone in our webinar asking, well, if the max drawdown is $3,000, but the most you could ever lose on one trade is like $500, how do you ever get to $3,000, right? It's a different sort of stopping out. And of course, the difference in stop loss systems is that one trade, because it has a stop, isn't going to ruin everything. But there might be a series of trades where you lose 1, 2, 3, 5 in a row, or 1, 2 in a row, small winner, 2 more in a row, small winner, 3 in a row, small winner, and it just builds up to the point where the accumulation of a bunch of stop losses adds up to $3,000. Whether that's a flat out losing streak, I lost a bunch of trades in a row and that all added up to 3,000, or I lose a couple, win, just like I said, and it all accumulates down to $3,000 loss. Now, the difference also here in these stop losses is when it stops out, that money is gone. You don't get it back. You're not still in the market waiting for, well, will it come back? And maybe it will, and probably it will, but it's gone. And that can take a toll because that money is not coming back. Hope is gone. And what causes depression? Lack of hope. So there is some sort of depression elements to trading a system with stop losses. The money's gone and you can feel sad. So that could take a toll, like I said, okay? So don't underestimate it. Be prepared for that. If you're prepared for it, it's not so bad. Or not really getting into trouble, a system with a stop loss can go back and forth, win, lose, and you've traded it for 3 weeks, 4 weeks, 6 weeks, and nothing's really happening. You're not losing. You're really not in trouble per se, but you're psychologically in trouble because it's not going anywhere, right? I want the heron to immediately go up to the sky and make 100% and go on TV and talk about it, right, and save the world. And it's going back and forth. Now it's been going a little bit better lately, and I expect it to do, I'm expecting it to do great things, obviously, but it's gone back and forth for a number of weeks and just hasn't done anything. And people say, hey, it's terrible. No one's actually emailed me saying it's terrible. People say, oh, it's not performing. I'm like, well, this is a 10-year project. It's not a 4-week project. So I get it, right? Stay on the sidelines, right? I'll be happy to lose the money while you watch. That's not a problem. But I just want to bring that up because that is an example of trouble. You're not monetarily in trouble, but you're in trouble because nothing is happening, right? So those are two different types of trouble. But then there's a third type of trouble, which is the no stop kind of trouble. And this, honestly, is the way I think most people trade. You buy a stock in 2004 and you hold it for the rest of your life, right? That's what most people do. Warren Buffett doesn't have stop losses on his trades. He holds them and holds them for decades. I think most people, Mr. Money Mustache, what we talked about, buying index funds, for example, if you're an index fund buyer, you don't have stop losses. I think the mutual fund buyers, I think almost everybody is a no-stop trader. I don't know. I don't have any facts. I just feel like it when you're talking about the masses. So most people are trading this way. So most people have to deal with this sort of trouble. The problem with this trouble is it drags on and on and on because you need the trade to come back. There's no stop out and starting over. You're in this and you're in it for a long time. And that is so draining. It can feel very, very defeating. So what can we do with this no stop kind of trouble? Well, here's some solutions. First, back to the systems with stop outs, you can just do nothing and wait it out. When you have a stop loss system, the good news is you know your winning percentages. You know your average wins. You know your losses. You know what can expect. You know what your equity curve looks like for the past decade. You know all this. So when you go through a losing streak, you just go back and say, we've done that 36 times before, right, in the past 13 years. So you just do nothing. You know the percentages. You know what your max drawdown. You're nowhere near it. You just keep trading. And you find comfort in the fact that it does stop out and you don't have to drag on for weeks, okay? Although it's tough to be down and slowly crawl back, right? If you have that inverted risk to reward or reward to risk, if your stop loss is 80 and your profit target's 10 and you take the full stop loss without getting out earlier and mitigating that, then that's going to be 8 trades before we even get it back. And that can be a little bit crappy in your brain. I lost. I'm glad it's over in a way, but now I've got to win the next 8 trades, and that can be very, very draining, okay? But we also know our percentages, as I said, so you can just wait it out. Or if you don't like that and you want to get it back quicker, you don't want to take an 80 pip stop loss with a 10 pip target. You could use martingale, double your bet, and now you got 20 back, right? And then you win. So you can get it back much faster when you have this sort of situation with martingale. We talked for several weeks about martingale. So that's another thing you can use. And I had some very interesting testing on martingale that I'm not going to share right now, but just thought I'd throw that out. It was cuckoo, very cuckoo. Anyway, but with no stop trading, which is, I think, the majority of the world, again, I just think that everybody does this, there's not much you can do, right? I mean, pretend you're in an index fund. Pretend you're a no-stop trader, and it's 2008. What do you do about that? I mean, what did anybody do about that? It's 2008, it's September, and your index fund is going right down the crapper, right? How much did index funds drop? Between 35 and 55% on average, right? Most people drop that much. If you're a no-stop trader, that's it. You just wait till next year. Like, what do you do? Like, there's nothing. There's nothing you can do. And depending on how much you had in and how much you pulled out, I mean, you may not be back yet. I think you would be, because obviously 2009, the stock market went crazy up. And obviously we've had a run lately that's gone crazy up. But when you're a no-stop trader, it's like, I mean, there's no martingale. I mean, I guess there is. But martingale becomes super deadly when you don't have a stop loss, right? If you start martingaling without a stop loss, yikes, that can go wrong in a hurry, okay? So there is like I said, a feeling of this hopelessness when you're in a no stop and you get into a trouble. It's just like, what do I do? Okay. And similar in robot land, of course, getting back to one of my systems, which I like. What if you're in a fair value trade, which doesn't use stops, and it's been longer than a week? This is an example of something going on right now. What are your options? If you're an index fund, you just hold it for the next 90 years and just wait. But what if you're in a fair value trade with a robot? You know that they usually only last a week. Well, what are we going to do about it? Let's talk about it. About 2 weeks ago, the USDCAD fair value, that's a lot of letters, the $CAD fair value robot entered a trade. Because we wait for extremes, we usually, well, not usually, but a lot of times it will continue to go down because we enter in the middle of a savage trend. This only goes long, so market was moving down. All right. Then, as is usual, the market went against us. So then it took 2 more trades, which it's supposed to do, and then it dropped, really dropped. And then it really dropped again, which leads us to today. If you're a fan or a student of fair value, or if you don't know, most fair value trades are done in 3 days, like 8%, 97%. 97% of the time you're done in 3 days. We're not done. It's been almost 2 weeks and we're not done. Okay. So we know that anything over a week needs our attention, which is why we're talking about it today. All right, let's get specific. At the moment, right now, using the recommended lots in the course, and there is a fair value course, and you can find the links everywhere on my website, on the YouTube channel, everywhere. Okay, using the recommended 0.1 lots on a small account, $5,000, $6,000, $10,000 account, something like that, 0.1 lots. Okay, you with me? The $CAD is in right now in about a $1,200 drawdown. All 4 positions are down between 200 and 300 pips. At $1 a pip, you add it all up, and it's about $1,200. Now, this is near or at or slightly exceeding historical highs. In the past 13 years, since 2003, the max drawdown was about 1170, a little higher. So we're right at that. We're right at that moment. So this is a bad one. There's a lot of negative news on the dollar, a lot of stuff going on in the world. I probably don't need to tell you. So we're at a max drawdown. Alarm bells, right? You should always pay attention when something's at the max drawdown. So let's talk about solutions, because we're supposed to talk about solutions. The first solution to getting this drawdown back in order is to add more positions, right? That's what people do, right? That's what Warren Buffett does. He buys a position over time. It goes down. He gets a better price. He gets excited. It goes down. We get a better price. Value investors get excited. But we've already taken the max amount of trades. The dollar Canadian only takes 4. That's what the testing showed us. And we're in 4. So we could add, but now we're breaking rules. And if you're using a robot, there's no robot left, right? There's no more ammunition. You were just in this drawdown because we're in the max amount of trades. So here are your actions. What can we do? All right, this is where we get creative. First, if you're trading the fair value portfolio, we talked about many, many times that the maximum drawdown for the fair value portfolio of 5, not 1, trading 5 currency pairs in this portfolio. The max drawdown for all 5 is $3,100. That's the worst. When all 5 were traded together, that's the worst I could find. I think it's like 3,200. I can get you the exact number. Doesn't matter. It's over 3,100 for sure. So we're trading 5 when what happened was several currency pairs got in several trades and they all went the wrong way and it added up to about $3,100. What did I just say? We're down 1,200. 1,200 is not anywhere near 3,100. So if you're looking at the dollar CAD, it's historically at its max drawdown level. But if you're trading the portfolio, we're nowhere near, right? No other trades in the fair value portfolio are even close to setting up. Everything else is at the wrong side of value. We're not anywhere near. Things are going up. We need them to go down to get in a trade. So the only trade we're going to be in if you're trading this portfolio is the dollar CAD, and it's 1,200 versus 31. So we are nowhere near, and this can be waited out quite a while. And the chances after these precipitous drops, the chances of this one currency pair going to 3,100 are very, very small. So let's move on. If we get into a situation like this and things go bad longer than a week, I've talked about this in webinars before, we can try to get paid for our trouble. What does that mean? Well, we trade the fair value on a 15-minute portfolio. What if you go to a higher, calmer time frame and see what fair value is there? Well, right now, if you go to a 240-minute, several time frames above, if you go to a 240-minute chart, fair value is at 33.64. Let's take a look. Oh, that's some testing I did. That's fantastic. I'll share that with you later, right? Don't even worry about that. That's the oscillator that, of course, never mind. It's just an indicator that counts how far it's been away from fair value. Here's a dollar CAD 240-minute chart. Look, we're down on the Bollinger Band of the 240-minute chart. Look at that drop. But what does that mean? We know that when it hits a Bollinger Band, that means it's time to snap back. So keep that in mind, right? It doesn't, historically, it doesn't go to that Bollinger Band on a 240-minute chart. It doesn't go that often, which means we're in extreme times, right? This is in the past several years. Past couple of years anyway. And when it does get to that Bollinger Band, it snaps back. So we're actually not at that bad of a spot. And in fact, the fair value 240-minute robot just took a trade, took a winner, right? But that's irrelevant. So here's where we're at. We got fair value all the way up here. This is the price range we need to make to get out of this trade. So we're about halfway in between. If this gets back to fair value, you can see we can get paid on this. We can get paid. If we decide not to just make a small amount of pips, like 8 pips or whatever we go for, if we decide because we're in trouble, we want to get paid on this, look at how far we can go. Well, let's be specific. Here's the current price, about $27.65. If it gets back to fair value, that is a lot of pips. We're down 1,200 now. Fair value is 600 pips above. We have 4 positions on. $4 times 600 is $2,400, right? If it goes all the way to fair value, right, from here, we're going to make all of our money back plus a whole lot more, right? We like to take about $8 on a trade. So if it goes 24, that's about 300 normal trades from this moment. And if it gets back, that's at least like 150 normal trades, right? So from this moment, it's like taking 300 trades. But if it just gets back to our target and we decide to hold on and it gets to fair value, that's like 100. So we're talking about, let's just be conservative. If we get paid on this, we could be like taking 100 or more successful trades. It's worth a thought, right? Instead of just saying, let's get out of this thing, let's say this is rare. This doesn't happen much. Let's see how far we can take it and get all the way back to fair value. Now, the problem with that, even though it sounds kind of enticing, The problem is waiting for all that to happen. It might be a while. The dollar CAD does not move very quickly. And if it just goes sideways or down over time, fair value will eventually over time get lower and lower because its price doesn't do well. Stuff goes down, right? Stuff's on sale for a long time. The sale price, right? The value goes down, right? If you hold a car for a long time, the value goes down. But there's also fair value on a 60-minute chart. Let's go back and take a look at that real quick, which is much closer. If it just comes up, thank you very much, TradeStation, for acting slowly today. It's been acting like a jerk. If it just gets up to this fair value area, that's still well above our break-even point, and we can make a little bit more money, and that will get there. It will get to fair value and touch, this is the 800. I'll get rid of that for you. It'll touch our fair value much quicker on a 60 than it will 240. And yes, we see this as dropping, but maybe the catalyst will hit and we'll rise up and maybe we'll get a little bit extra for our time, right? Right now, from this moment, that'd be like 390 pips from now, which would be about $1,500 from where we are. And so we could not only make up all of our drawdown, but get paid quite a bit for our trouble. So this is something to consider. When you get into trouble on a fair value trade, if you get into trouble as a value investor, those are the moments where you can change your mindset if you want and say, I'm buying something extremely on sale. I'm going to go for it. I'm going to get paid on this. And I'm going to get paid for my time and see if I can make up, not only just get back to break even, but do a lot more. Oops, I didn't mean to go there. Okay. So you can see you can go to the 240-minute chart and really get paid and wait a while. Or you can do the 60-minute chart, use that as fair value, hold it a little bit longer, because that would probably mean we get back into break even, and you have to hold it beyond break even and then wait for it to hit. When it hits the 600 or the midpoint of that Bollinger Band, just get out then. Of course, now you're doing it manually. Okay, the robot would take it out by itself. Let's talk about a few more things. The bottom line here, with all of the trouble, is that patience is the key. Remember, if you have stop losses, you just have to trust your percentages and wait it out, right? With the dollar CAD or other no-stop trades, you could, instead of just waiting to get back to break even, wait it out and get paid for your trouble. I specifically did not want you to do that, TradeStation, you piece of garbage. I even turned off my TradeStation data so it wouldn't make that auga. People. Anyway. Or think about this. Remember I said it's a portfolio of 5. You could turn off all the other robots in your fair value portfolio right now so that there's no chance of getting into any more trades and there's no chance of going to that max drawdown. Well, there's always a chance, but the slim chance. Turn off all the other robots. Just wait out the dollar CAD and go for it with this one currency pair. Don't trade the others. Focus on this one, and then go for fair value on a higher time frame, 240-minute chart, maybe even a 360-minute chart or a 480-minute chart, right? Go for it. Any fair value that's far above where we're at right now, which we already saw on the 240-minute chart, let's go for that. Take the robot off, and when it gets to that fair value, let's get paid. By turning the others off or not trading them, we're guaranteeing the chance that we're not going to get to this max drawdown number, and we're going to keep things under control. Just something to consider. Now, there was a winning trade in the fair value portfolio yesterday or the day before, so that actually gave us money while we're waiting for this one to work out. So that's the other one. Keep all the others on. Maybe we get a trade, another trade sometime down the road, and maybe that starts helping us get paid while we're waiting too, and then just take the trade out when it gets back to break even or we make a few bucks. Last thing I'll tell you, because you saw that on the 240-minute chart and even on the 60-minute chart, you could turn the robots off if you're trading it automated and take on one more position at 0.1 lots. Take one more because we know we're extreme. Turn off the others or turn down the others and go for it and try to make even more money. A, you get back to break even faster, or B, we make even more. I would not recommend any more than one more position. But if you wanted to, you could do that right now, and maybe we get paid off a little bit faster, right? So that's one more situation. But if you're going to do that, again, I would recommend not trading anymore. Let's just focus on one. If you want to get paid on this, I would recommend let's focus on just this one and see if we can get paid off. Okay. And one more thing I'll add, besides getting paid off, if you get a little bit freaky, just wait for the loss to come up, come up, come up. When it gets reasonable, take it out, even if it's, 10, 20, 30, 40 bucks, whatever. If it gets close, just take it out and get back to work, and we'll start making trades, in that 3-day period. All right. Trouble is no fun at all. But if you have a plan or statistics, if you have either one of those, then trouble isn't so tough after all. Right. So those are some ideas if you happen to be in a dollar CAD trade. And those are some ideas if you're just trading a system without stops, right? There are a lot of good systems out there that don't trade with stop losses, and this is the mentality you could use. Get into one and focus on it and try to get paid. All right, let's see if there's any questions or comments before we wrap it up. Let's see. Oh, howdy from South Africa. That's why I saw that one before. Okay. Because this is where Tim says we're glad we're talking about Drawdown because this is where he lives. Well, if you're trading no stops, pretty much 80-90% of your life is going to be in Drawdown. That's just the way it goes, right? That's stinky. Anticipation. Ron was singing to me via the text box. Di says, do we turn off the robot? If I were trading this, my recommended, I don't like to do it manually. I mean, I absolutely would, and I used to trade this way. I would leave the robot on, absolutely. Now, the problem with that is if it gets close, then you would have to turn the robot off if you want to go for more, right? But obviously, the clearest option in all of this is just to do nothing and let it get back to a profit, take it out for a small winner, and move on. That's the easiest, and that means you leave the robot on and do nothing. Doing nothing is a very viable option too. But if you want to go for more, then again, yes, you'd have to turn the robot off. Got it? Okay, good. Trouble where Americans, we love getting in trouble. Oh, Bruce Lee. You just said, Ron just mentioned Bruce Lee, which is my second favorite human ever behind Roger Federer. Elima says, love your ideas. Thanks. All right, everybody. Those are some get out of trouble tidbits. And I accidentally did that. I almost hit goodbye. Didn't mean to hit goodbye. Here is the latest updates page that we do at the end. You got the Heron course, you got the Martingale. If you're interested, I'm doing, like I said, a lot of work on futures. Did I say that? Well, if I didn't, I am. Very, very interesting day trading results on futures. And I'm also working on a day trading system on stocks too. So keep that in mind. We might be talking futures and stocks here in a little bit, and we'll never stop talking Forex, okay? And so that's the information. There's your contact information if you need to reach me. Hope you enjoyed it. We'll be watching this dollar CAD trade over time and see how it works out, maybe have more insight. And we'll have more information on other trading systems and other robots next time. I'll talk to you soon. Bye for now.